Have you ever seen your dream home, then been told you can't get it because the price is just too high for a regular mortgage? What if I told you there's actually a way to finance luxury homes, even those million-dollar beauties, without draining your savings or winning the lottery? But here's the catch. Jumbo loans come with some sneaky rules you must know, or they could cost you thousands. Stick with me, because by the end of this video, you'll know exactly what a jumbo loan is, how it works, and whether it's the right move for you. And there's one surprising fact about jumbo loans most first-time buyers completely miss. Number 1. What exactly is a jumbo loan? A jumbo loan is simply a mortgage that's bigger than what's allowed by standard loan limits set by the government. The Federal Housing Finance Agency sets limits each year for what they call conforming loans. Anything above that limit is considered non-conforming, or in plain English, a jumbo loan. For example, in most parts of the United States, the conforming loan limit is about $726,200 for a single-family home in 2025. So if you're buying a home for, say, $900,000 and you need to borrow more than that limit, you'll likely need a jumbo loan. It's like needing an XXL shirt because a regular large just won't fit. Simple, right? But it's also a bit risky. And here's why you should care. Number 2, why would anyone use a jumbo loan? If you're eyeing a home in an expensive area, think San Francisco, New York City, or parts of Los Angeles. Homes can easily cost over $1 million. You might not have that kind of cash lying around, but you still want that dream home. Jumbo loans allow you to finance those higher-priced homes. For example, Sarah, a teacher in San Diego, found her perfect home at $950,000 she had saved. Enough for a 20% down payment, but still needed a loan for about $760,000 over the conforming limit. A jumbo loan helped her close the deal. Without it, she'd have been stuck settling for a smaller house or waiting years to save more. Number 3, how do jumbo loans work differently? Here's where it gets interesting. Because jumbo loans are not backed by government-sponsored agencies like Fannie Mae or Freddie Mac, they're riskier for lenders. And when lenders feel more risk, they make you jump through more hoops. You'll often need a bigger down payment, usually 10 to 20%, a better credit score, often 700 or higher, more proof of income and assets, and the interest rate? It used to be higher, but today, jumbo loans can actually have rates close to, or sometimes even lower than, conforming loans, depending on the lender. For example, John applied for a jumbo loan of $800,000 with a 750 credit score and 25% down. His rate came back nearly equal to his friend's smaller mortgage rate because his finances were strong, so don't assume you'll automatically pay more interest. Number 4, what are the pros of a jumbo loan? Let's talk benefits, because there are some big ones. You can buy a more expensive home without draining your savings. You can stay in competitive markets where homes cost more than the conforming limits. And you don't have to split your mortgage into 2 loans, which used to be common before jumbo loans became more accessible. One clean, single mortgage can actually be less hassle over time. For example, a family in Boston was debating between a jumbo loan and 2 smaller mortgages called a piggyback loan. They chose the jumbo and found managing one payment much simpler and less stressful. Number 5. What are the risks of a jumbo loan? Of course, it's not all sunshine and luxury. Jumbo loans mean bigger debt, plain and simple. Your monthly payments will be higher. And because you're borrowing more, you're more vulnerable if the housing market drops. Remember the 2008 crash? Homeowners with big mortgages found themselves underwater, owing more than their homes were worth. That's why lenders demand more documentation and higher credit scores for jumbo loans to protect themselves from risk. And here's something surprising. Some lenders might even require you to have a certain amount of cash reserves, sometimes equal to 6 months of payments, just sitting in your account. So if you're not financially ready, a jumbo loan can quickly become a jumbo headache. Number 6. How do you qualify for a jumbo loan? You'll need to prove you're a good risk. Here's what most lenders look for: a credit score of at least 700, though some might ask for 720 or more, a down payment of 10 to 20%, a debt-to-income ratio below 43%, meaning your monthly debts, including the new mortgage, equal less than 43% of your gross monthly income. Plenty of documentation, tax returns, pay stubs, bank statements, even letters explaining any large deposits or unusual activity. One buyer in Chicago had to explain a $15,000 transfer from his dad's account before his jumbo loan was approved. So be ready to show your homework. Number 7. Are jumbo loans available everywhere? Here's a question many beginners ask. Can I get a jumbo loan in my state? Good news. Yes, jumbo loans are offered nationwide, but the conforming loan limit varies by county. For example, in high-cost areas like parts of California or Hawaii, the limit is higher, over $1 million in some places, meaning you might not even need a jumbo loan for $1 million home there. Always check your county's current loan limits before assuming you need a jumbo loan. Your lender can help you figure this out. Number 8. What surprising facts should you know about jumbo loans? Okay, time to close the curiosity loop I opened earlier. Here's something most beginners don't realize. Jumbo loans can actually be cheaper than you think. Many lenders now compete for high-quality borrowers, offering lower rates and better terms to attract customers taking out jumbo loans. In some cases, borrowers with excellent credit and strong finances have been able to secure a jumbo loan with a rate lower than the national average for conforming loans. That's right. If you play your cards right, borrowing more can sometimes cost you less. Surprising, isn't it? Number 9. How much cash do you really need for a jumbo loan? You might be wondering, do I need to walk into the bank with a suitcase full of cash just to qualify? Not quite, but you do need to show you've got some skin in the game. Most lenders want at least 10 to 20% down. For example, if you're buying a $900,000 home, expect to put down anywhere from $90,000 to $180,000 up front. This protects the lender and shows you're financially stable enough to handle the risk. And don't forget about closing costs. On jumbo loans, those can also run a bit higher, typically between 2 and 5% of the loan amount. So make sure you budget not just for your down payment, but also for those extra fees. One couple I coached in Miami saved for years, only to realize they hadn't factored in $30,000 in closing costs. Don't make their mistake. Number 10. What kind of homes are usually bought with jumbo loans? Here's where it gets fun. Jumbo loans aren't just for millionaires buying mansions. Yes, luxury homes are common. Sprawling estates, beachfront condos, penthouses overlooking the city skyline. But in some markets, even modest family homes can require a jumbo loan simply because of sky-high prices. For example, a 3-bedroom house in Silicon Valley can easily top $1.2 million. So jumbo loans aren't just for the ultra-wealthy. They're sometimes the only option in expensive areas. Think of jumbo loans as a tool, not a status symbol. Number 11. Can first-time buyers get jumbo loans? If you're a first-time buyer, you might feel intimidated by the idea of a jumbo loan. Good news. It's absolutely possible. In fact, more and more first-time buyers are turning to jumbo loans because of rising home prices. The key is preparation. Build your credit score, save a strong down payment, and lower your other debts. One young professional couple in Washington, D.C. managed to qualify for an $800,000 jumbo loan on their first home by keeping their student loans low and saving aggressively for a few years. So yes, even as a beginner, you can qualify if you plan smartly. Number 12. Are there alternatives to jumbo loans? Here's something a lot of people don't think about. You do have options. If you don't feel ready for a jumbo loan, you can buy a smaller home within the conforming limits. Save longer and increase your down payment to reduce the loan amount. Look into piggyback loans, 2 smaller loans that add up to the amount you need. For example, one buyer in Denver used an October 10th, 80 strategy, an 80% first mortgage, a 10% second loan, and a 10% down payment to avoid a jumbo loan altogether. Each option comes with its own pros and cons, so weigh them carefully. Number 13. What happens if you fall behind on a jumbo loan? Here's a sobering thought. Because jumbo loans are bigger, the stakes are higher. If you miss payments, foreclosure can happen faster and hurt even more. Some lenders are less forgiving with jumbo loans because they can't sell them easily to Fannie Mae or Freddie Mac. So always keep an emergency fund, at least a few months of payments, just in case life throws you a curveball. One family in New Jersey nearly lost their home when the husband lost his job just months after closing. Luckily, they had 6 months of savings to keep up with payments until he found work again. Prepare for the worst, even as you hope for the best. So, After hearing all this, what do you think? Would you take out a jumbo loan if it meant getting into your dream home? Or would you play it safe and wait? Drop your thoughts in the comments. I'd love to hear what you'd do.